Will the ATO find out? That's the question that I get the most when someone's made a gain on their cryptocurrency and they want to know what to do about it. So I thought I'd just make this video. It's the third in a 4-part series where I go through my experience with cryptocurrency. We ran the Bitcoin case against the tax office, got the silver medal, but a lot of good law and clarifying law came out of it, especially in the submissions and the discussions with the tribunal member at the time. The first part of the series I kind of went through the case and what happened. The second part of the series I went through what happens when you lose money, and then I said I'd do a third part which goes through what happens if you've actually made a gain and what are the options and possibilities. And I thought I might make this interesting by instead of just talking at you with stories, I'll answer questions that I commonly get, because that's probably way more relevant. So let me start with one of them, which is about inflation. Okay, someone will say to me, okay, I invested in this crypto and say I doubled my money, but when I go down to the store, groceries seem to have doubled in price. You know, when I need to fill petrol in the car, that seems to have doubled in price. So if everything's doubled in price, does that mean I really made a gain? Very clever argument, very good question. And economically, maybe you haven't. Economically, maybe what you've done is keep the same purchasing power on your asset base. Because if everything else is doubled and what you've got is doubled, then are you really ahead? Probably not. The tax law doesn't work that way. The tax law just says, hey, you made a nominal gain based on the Australian dollar, and so you need to pay tax on that gain. It doesn't matter if everything else is doubled, right? It doesn't take into account inflation. The other thing I get is, well, what's really happened here is the value of my Australian dollars has gone down, right? So if you think about it, if everything's doubled in price, has everything doubled in price, or has your Australian dollar bank account halved in value? You know, has the Australian dollar gone down against commodities? And look, there's probably some truth to that, and you're probably right. If you do think that way, that's probably somewhat accurate. But can you claim a loss in your Australian dollars by a loss of purchasing power against your taxes? No, not really. Maybe in some situations you can, if you have the right type of instrument, but generally speaking, it doesn't work that way. So the tax law is based on everything relative to Australian dollars. And if Australian dollars go down in value and everything doubles in price or triples in price, guess what? You've got more Australian dollars in, quantity terms. You're going to be paying tax on that increase. And that's just how it works. The tax law doesn't think about economic consequences or the way things work in a substantive way. It's just a very rigid application of rules, which is designed based on Australian dollars to tax you on any increase. The second thing I get a lot is, if I made a gain or whatever, how does the tax office find out? And my answer to that is that this is really a moot point. At some point in time, you might want to spend the money that you've made. Okay, you might want to convert your holdings into fiat or something, buy a house or do something, buy a car, buy groceries, whatever it is. And when that happens, the money will materialize in your account, obviously from somewhere, right? And the tax office will just say, well, where did that money come from? They will find out definitely when you want to spend it, right? Before that point, maybe they'll know, they will know, maybe they don't, I don't know. But definitely when you're spending it and all of a sudden this person who has this nominal or low income or is buying this very expensive asset, that's going to trigger some kind of warning, some kind of question. So what I always say to people is that it's not about whether the tax office is going to find out or not. It's about what do the rules say, what are your rights and obligations. If you've done everything the right way all paperwork, then you'll always be able to show that. You'll never be caught out with where did this come from, because if you're in that position, you're in a very, very weak position. What people often ask me about then is, if they find out, what can they do? And the reality is the tax law is not really taxpayer friendly. I mean, we sort of have a self-assessment system, and what that means is you sort of work out your own taxes and you tell the tax office what it is. But the audit power of the tax office is very, very extensive. The law is based on the assumption that the tax office is going to do a good job, understands what's going on, does a good and fair calculation, and then you've got an uphill battle to try to say otherwise in an 85-degree uphill. It's very hard. At the end of the day, the tax office doesn't even have to get the amount right. They just have to have a go. And then it's up to you to prove what should have happened, and the level of effort, energy and proof that you need to do that is very, very extensive. It's obviously not desirable to be in that situation in the first place. The other question I'll get will be, well, what can I do if I have made a gain? And I think it depends on whether the gain is realized or unrealized. But and it also depends very much on the facts. So this is very fact specific. I'll explain what I mean by that. So the tax law is based on a certain reality. That reality does not include cryptocurrency being used in the way that it's currently being used. It kind of reminds me of when I started my career. I had this international tax issue I was dealing with. There was this type of entity called an ANSALT and another one called a Stiftung in another country, which doesn't exist in Australia. The question is, how do you tax this? Does it get taxed like a company? It's not a company, or a trust, or a partnership. We've got set options and things need to fit in those boxes, and then the taxation runs accordingly. And when you've got something that doesn't fit neatly in the box, it creates somewhat of a opportunity, but also a risk. There's a possibility of getting a good result and a possibility of getting an absolute terrible result because it doesn't quite fit neatly, and becomes a very fact-specific question. The same with cryptocurrency. Really, it should be treated as a foreign currency because those laws and rules make sense, but the courts have said that it's not. So it gets thrown into the rules that apply to like for example, like a table, a car, a house, these types of other types of assets. Probably the closest would be shares, and as sophisticated as you can get with shares and the different derivatives, it's not quite the same. I don't go out and say, hey, I've got a share in Commonwealth Bank, how about I give that to you and you give me a chair or something like that. You don't use it that way, so it doesn't quite fit. And so it becomes a very fact-specific question. Now, the default in the tax office is to say, well, it's probably a capital gain, and if it's a capital gain, you get a capital gains tax discount, and that's not a bad outcome for someone who, probably doesn't want to do a lot of thinking, put a lot of effort into it, or investigate the facts in a lot of detail. It's not a bad base case to start off with, but it is a very fact-specific thing. You need to know who holds it, how did they get it, what is it exactly, and you have to go through a lot of different possibilities to figure out where it might fit and what could happen. There's just too many possibilities to be able to cover all of them here. When I do the fourth part of the series, which was to cover, go into a deep dive in the case and talk about different structures and things, I might, as part of that, just go through some different types of examples, and then you'll be able to see what I mean. I might leave it at that, and thank you for watching, and until next time.